Good morning, everybody. Mike Vaki, PrincetonTrader.com here for NTMarkets.com with your Monday morning pre-market webcast. Okay, daily chart of the ES, and Friday was essentially a draw. The bulls made new highs, which is good, but they didn't touch the upper Bollinger Band. They needed to do about 41.5 to make that happen. So the inability to touch the Bollinger Band is a check mark in the bear column. The bears pushed lower the majority of the day, but they weren't able to make new lows versus the Thursday lows, which would have been below 1829.75. So while the bears had a decent day, they put a doji in. They did not take out the prior day low, so it was not a clear advantage for the bears. What we are seeing going into today is basically flat trading, and we are still in holiday trading. Don't kid yourselves that we're not. We are in today. We're in tomorrow, and then we get into New Year's, and by the time tomorrow afternoon comes, it's going to be very, very thin again. I will be interested to see how thin it is today. That said, that kind of trading lends itself towards either morning dips being bought for a ground up, or what you saw on Friday, which was a little bit of a morning pop off the open up to 1840, kind of getting gradually sold down. But not enough to really move things. I mean, just the size of these candles, these are very tight range days. So I would expect that to continue. So what are we looking at today? Well, the upper band is up essentially at 1846. It sounds like kind of a tall order from here for the bulls to do, but in a thin market, if there's enough interest in buying the dip and enough people get squeezed up over 1840, it can happen. What the bears need to do is get below 1833 and go to work on the 1829 area. Basically, I'm looking at two areas from when we do actually pull back. And what I mean by actually pull back is when we start making lower lows versus the prior day. And that's 1812.5, which is the prior high, and the middle band, which right now is trading about 1802.20. So my suggestion would be, don't be so obsessed with catching the actual top. I have something called the 80% rule, which talks about dealing with the meat of the move. You catch the 80% middle of a move. Throw away the top 10%, throw away the bottom 10%, concentrate on the middle 80, and you'll be fine. Very rarely do you see traders holding things, and coming up with these gigantic handle winners because it's hard to hold things when they're moving in your direction. So the key is not to be so early in trying to catch every single tick of a move so you can say that you caught the top. It's more important to see the chart start to break down. And this chart starts to break down when we start making lows below the prior day low and not making new highs during a day. So we did both, we made new highs on Friday. So that's not a day that I really want to start throwing a bunch of shorts on. If we get through today and we can't make a new high, if 1840 survives the day, and we take out the Friday low, then you start to think, well, if we test that Friday low and it becomes resistance, that's an area where my risk is identified, and you can start thinking about the short side. And, when we do move down, we're going to move down not significantly, but, 1812 isn't insignificant. The problem is everybody tries to catch the top, and then everybody thinks they're going to hold it for a 100 handle winner because they think that this high is going to be the high and we're going to go, Wile E. Coyote off the cliff and away we go. It's just not working that way, and this uptrend isn't working that way. So you need to take what you can get, and that's typically be on the long side until the chart slowly starts to break down. And then if you want to be short, then ride it for that little bit down. But understand when we get down there that there's a dip coming, and that dip is going to get bought. And so don't overstay your welcome. Don't overstay your welcome. The people that didn't get out on this lower low, especially after we got back to the middle band at the time, they overstayed their welcome. And I would imagine they probably got squeezed out around 1795 or 1800. Just don't do that. Okay? So, everybody have a fantastic day. I'll be back tomorrow morning with another webcast. Check us out on Twitter at Princeton Trader. Check out the website. Check out the chat room. Come start your 2014 with a free trial of the chat room. See if we can help out your trading, we'd like the opportunity to meet you and do so. So come on by and check us out. Everybody have a great day. Trade them well.